Have you ever locked your mortgage rate only to see rates drop a few days later? Or maybe you waited, expecting rates to fall, and instead, they jumped by 0.5%. What if I told you there's a way to get a better idea of where mortgage rates may be headed before you lock your loan? Hi, I'm Jahanbin with over 20 years of experience as a top-producing mortgage broker. Today I'm going to share one of the biggest mortgage secrets that professional loan officers and mortgage traders watch every single day. It's called the Treasury market, more specifically the 10-year Treasury bond and the 2-year Treasury bond. Now, here's the first thing you need to know. Most people think the Federal Reserve directly controls mortgage rates. That's actually not true. The Federal Reserve controls short-term interest rates. Mortgage rates, on the other hand, are heavily influenced by what's happening in the bond market. And the single most important indicator is the 10-year Treasury yield. Why? Because most 30-year fixed mortgage-backed securities tend to move in the same direction as the 10-year Treasury. Notice I said the same direction, not the exact same percentage. So here's the secret. If you see the 10-year Treasury yield dropping consistently over several days, there's a good chance mortgage rates could improve. If the 10-year Treasury yield starts rising quickly, mortgage rates often follow. That's why many mortgage professionals check the 10-year Treasury every morning before advising clients whether to lock or float their interest rate. Now let's talk about another indicator that's even more powerful, the 2-year Treasury yield. Why does it matter? Because the 2-year Treasury closely reflects what investors believe the Federal Reserve will do next. If the 2-year yield starts falling significantly, investors are expecting future Fed rate cuts. And when markets expect lower Fed rates, mortgage rates often begin improving before the Federal Reserve even announces anything. In other words, the bond market usually moves first. The news comes later. That's why investors often know where rates are heading before most consumers hear about it on television. Here's another important clue. Watch the relationship between the 2-year Treasury and the 10-year Treasury. If both yields are moving lower together, that's usually a positive sign for mortgage rates. If both are climbing higher, mortgage rates may continue increasing. Now here's something else I watch every day. Inflation reports. When inflation comes in lower than expected, bond prices usually rise. And when bond prices rise, Treasury yields generally fall. Lower Treasury yields often lead to lower mortgage rates. The same goes for unemployment reports. If the economy starts slowing down and unemployment rises, investors often move money into bonds. That pushes Treasury yields lower and can help mortgage rates improve. But if inflation is running hot and the economy is stronger than expected, Treasury yields usually rise, and that often means higher mortgage rates. So before you lock your rate, here's my checklist. Number 1, check the 10-year Treasury yield. Is it trending higher or lower? Number 2, look at the 2-year Treasury yield. What is the market expecting from the Federal Reserve? Number 3, pay attention to major inflation reports like the Consumer Price Index, also known as CPI, and the Personal Consumption Expenditures Index, or PCE. Number 4, watch employment reports, including non-farm payrolls and the unemployment rate. And finally, talk to an experienced mortgage broker who watches the bond market every day, not just someone who quotes today's interest rate. Remember, nobody can predict mortgage rates with 100% accuracy. Unexpected news, global events, and economic data can change the market in minutes. But understanding these indicators can help you make a much more informed decision about when to lock your rate. If you're buying a home or refinancing and you're not sure whether to lock or wait, I'd be happy to review the market with you and discuss your options. If you found this video helpful, please hit the like button, subscribe to the channel, and turn on notifications. Every week I share mortgage tips, interest rate updates, and strategies that can help you save thousands of dollars. I'm Jahanbin with over 20 years of experience as a top producing mortgage broker. Thanks for watching, and I'll see you in the next video.